There's been a 14% drop in the price of crude oil since the OPEC meeting back on the 25th of May, when both OPEC and non-OPEC producers agreed to continue with their planned strategy of cutting production. Where does oil go from here? We're now with Miswin Mahesh, an oil analyst at Energy Aspects in London. It's good to talk to you. In a recent paper, you spoke about the OPEC policy paralysis. What did you mean exactly?
So one of the things that the market's really noting at this stage is, yes, OPEC's cutting production, but the export numbers haven't really commensurately fallen. And that has been the big worry, so as to say, over the past few weeks, that yes, production is falling, but exports are still not falling as much. So that in itself is not helping global inventories drop. The expectation now from OPEC is or rather the foresight that they've given the market is this time round exports will also fall as much as production will fall as well.
So what has been the core reason then why we've seen this oil price fall? Is it a demand side, or is it a supply side issue, or is it perhaps, maybe as you possibly alluding to, a mixture of both?
Yes, it's been a combination of both. So on the demand side, overall global oil demand is still fairly healthy. So we're tracking about 1.4 million barrels per day. The only sort of weak spot, I should say, at this stage is that Chinese buying hasn't been as strong. So the Chinese refineries bought a lot in the first quarter of this year, so they've stocked quite a bit, which means that as their runs have started to pick up, they're not really relying on fresh imports. So that's one on the demand side. The rest of it, both the OECD and the non-OECD things still look good, although the recent weekly data out of the US has been disappointing, although that still is subject to a lot of revisions. The other thing I'd say is on the supply side, one, we are seeing a lot of light crude volumes come back into the market, especially with Libya and Nigeria adding on to the global market where shale is still growing. So the light crude market's still fairly oversupplied at the prompt, and that's why we're seeing the weakness. It's the heavier and the medium grade crudes that are getting affected, but those don't price in directly into benchmark grades such as Brent and WTI.
If we look at a price of WTI, West Texas Intermediate at the moment, we're around about the $44.80 level. We've got a little bit of support. Technically, we've got a bit of support coming through at the $44 level, and then it's pretty much past then $40 or lower. Where do you see the price of crude going from this point?
So at this point, again, we see the downward momentum slowing down eventually. We don't see it going as low as the $30 level that you've just mentioned, because fundamentals are tightening. It's just it's just the market sort of trying to find out this data point in terms of where these stock draws are, and as much as they start getting more evident, they'll start balancing.
So what are OPEC and non-OPEC producers now then thinking? What are the process they're going through at the moment? Are they thinking they're going to have to cut more, or are they thinking that the market's then going to start to believe them and that they have been approaching the right strategy?
Yeah, so they've lost a little bit of a bit of credibility over the last 6 months with the fact that exports were high, that they've drawn down their own stocks, etc. At this stage, they're sort of having a wait-and-see approach to see if let's see what the summer demand season brings through in terms of stock draws. Saudi Arabia is pretty confident that we will get stock draws. It just remains to be seen what the scale will be of those stock draws. Following that, they might reconvene again and decide if further action needs to be taken to balance the market. But until then, we are probably likely to see business as usual.
How about the US shale producers? At what point are these high-cost producers priced out of the market?
They're doing quite well at the moment, and we do expect them to grow as well. One thing to remember is most of them have hedged for this year. So whatever price we fall to over the coming months, it doesn't really matter for them, given that they have hedged quite significantly. It's for next year it actually matters, and this is where OPEC wants to flip the curve into backwardation as well, so that they stop hedging. They usually don't hedge into a backwardated market as much as they would hedge when the market is in contango.
One final question is, of course, the one that everybody always wants to know: where is the oil price going? Where do you see it in 6 months' time as we head into the back end of the year?
So in 6 months' time, we continue to see it sort of treading higher. We will see a bit of softness in this quarter because sentiment has been bruised badly after the OPEC meeting. It will take a bit of time for fundamentals to shift, but the underlying movement is still taking place. So we will see a much tighter market come the second half of the year.
Okay, Miswin, look, it's been a pleasure. Thanks indeed for joining us. That's Miswin Mahesh from Energy Aspects.